be in the zone. Gazing at the walls, depressed, picking the phone. They take it personal, but only your mind if you could understand what a nigga feeling. 41st till I die, motherfuckers. I'm still breathing, you a mud, so we full bread. You ain't my dog, trying to infiltrate the clique issue. I get with you into that on a later note. We overdose every day to death, we so close. I'm trying to tell these cats, but I let them do their thing. Ready for the bad news till the phone ring. Son is dead now anyway. Over my head, seeking revenge, son. Been son, on your behalf, trying to laugh out the drill gun. Conceal guns, play the hum. For real sons. For you motherfucking hoes.
Testing 1, 2, 3. Hello everyone, welcome to another live stream. So let me just set everything up. Looks like the sound is working well. So let me pop out the chat. That's the first thing we need to do. Minimize this and then share my window. So let's do that. I'm sorry I came in a bit unprepared, but we're working with what we have. Video capture, display capture, window capture. Window capture. Okay. So let me also move this bit low. Like this, and adjust the size. So for anyone that is following my ChatGPT trading battle, an update should be coming out tomorrow. So I filmed it, I'm editing it now, and I think I'm gonna have the release scheduled for tomorrow. So watch out on my channel or subscribe if you haven't already for updates on that. So what do we have in the markets? Well, this was a pretty crucial week. I have been telling you about the three crucial data releases. So let me see, what is this? First one was NFP, which came in at 22,000. Okay, 22K, much lower than the forecast. So a big concern for the jobs market. And also just a reminder, if you have any questions, any chart requests, you can put it in the chat. I do have my chat open on the side. And yeah, so basically let me know if you have any questions. NFP, that is done. Then we had PPI, which came in pretty much similar to the forecast, even a bit lower than the forecast. So it came in kind of, you can say inflation is cooling a little bit. It is not rising. And then today at 14:30 my time, we got CPI. So we got the CPI inflation print, came in pretty much right on the dot, so same as the forecast. Now, if you want to see the trends of inflation, we can jump onto the Edge Finder and I can show you the inflation trends. So let's go to USD, rising. So inflation in the United States is definitely rising higher. It is sort of hitting the forecast, but it's also rising. I mean, you can see a clear uptrend from, what is this, May to now September. This is CPI. Now, producer price index is, well, it's kind of steady, but then in August you had an increase. Now we're back. So now it's a decrease in the PPI, a decrease of inflation. But I would say overall inflation is rising. I'm focusing on the CPI. You know, so if you want to know what the most important inflation print is, it is going to be CPI, or the consumer price index. It is what the consumer is paying. It is when you go into the store, when you buy gas, when you buy online. It is the sort of inflation that you're experiencing in those scenarios. So basically, this means in 1 year, let's say US dollar has lost 2.9% of its value. So inflation has eaten up 2.9%. So what does that mean? Well, it's all about the rate cuts. You know, this whole thing is about rate cuts. Everything is wondering, will the Fed cut interest rates? We can take a look at that with the Fed interest rate. I like Trading Economics website. So this is a pretty cool free website you can use. And this is the interest rate. So they hiked after COVID because they printed a shit ton of money. And then the rate was flat. They cut a bit right before the election. Who would know why would they do that? But they cut right into the election. And then they kept the rate flat. So everyone is wondering, will they cut? By how much will they cut? Well, they will cut, and here it is what we expect. So in September, we expect a 25 basis point cut. By the end of 25, we expect a 75 basis point cut. So basically from around 4.25 to 450, all the way to 350 to 375, okay, basis points. So yeah. One rate cut in September and 3 rate cuts by the end of the year. That is what is priced in. So that's the current game plan. Now, why did I tell you that I was waiting for these numbers? Well, I was looking at scenarios that if we had a crazy number, crazy high, crazy low, let's say crazy low NFP, crazy low inflation, then that would be much more aggressive for rate cuts. But if we had a very good NFP and a very high inflation, that would be very, very bad for rate cuts. Rate cuts would not happen. What we actually had was pretty much the data came in right on the dot. So the data came in as expected. No surprise there. Now, what is important for us as traders? For us as traders, it is important that you get some data that is not priced in. The best trends, the best opportunities in the markets, they happen when you get some data that is unexpected, that is not priced in, that is much, much different, much higher or much lower than the forecast. And also one more thing I wanted to show you is from Brent Donnelly. So I closely watch Brent Donnelly, and this is his last post. This is I'm a subscriber of his newsletter, so this is kind of a paid thing, but I don't think he would mind me showing this. It is the interest rate forecast that is priced in until April 2026. So you can see for every major economy, basically every single central bank is planning on cutting interest rates except Japan. Japan is alone. Japan is the only one that's planning to raise interest rates. So by this chart, it would tell me that the JPY could gain some value in the upcoming months, and pretty much all of the other currencies could lose value against the Japanese yen, because most central banks are planning to cut interest rates, while the JPY or the Japan is planning to hike them. And that's kind of it for the numbers. Hope it wasn't too boring for you guys, but it is what I've been focusing on. It is what I have been heavily trading in 2025. Now we can jump onto the charts. So now we can take a look at what is happening in the chart department. So I have my watch list. I have 6 things on the watch list right now. I have the NASDAQ, gold, silver, euro dollar, euro GBP, and USD CAD. So I do have 3 trades running, euro dollar, euro GBP, and USD CAD. We will see what happens with those trades. But let's start with the first one. That would be the NASDAQ. So for the NASDAQ, I think we're a bit overextended here at this point. I think we are slowing down a little bit. So I'm looking for a pullback to some support levels. Also, the rate cut story is bullish for the NASDAQ. So I know people expect rate cuts and then they think the NASDAQ is just going to fly higher. Well, it doesn't really work that way. There is a big problem because there is a reason for rate cuts. And the reason for rate cuts is that the jobs numbers are not doing well. So if NFP continues on this on this downward path, that could be a problem. So that could definitely be problematic for the US and for the NASDAQ. Even though you get rate cuts, if the rate cuts don't work, if they don't increase the jobs, then NFP suffers, or sorry, the NASDAQ suffers. So that's why it's super hard to trade the stock market right now, especially the indices, because even though like rate cuts are bullish, but then a bad NFP print is bearish. So you're getting kind of contradicting evidence, you can say. One thing tells you to be bullish, one thing tells you to be bearish. What does the market usually do? It stays flat. It remains flat, or it kind of grinds higher. So in the case of the NASDAQ and the S&P, actually S&P is doing pretty well. It's just grinding higher. Let me see what the hell is my Interactive Brokers doing. So let me see my Interactive Brokers account, because I do have some S&P. I haven't checked it in quite a long time. It's just flat. It's not been doing much. So that would be because the euro dollar exchange rate has been super flat as well. And before that, as the S&P was climbing higher, so did the euro against the dollar. And because I live in Europe, my S&P 500 performance is quoted in euros. So you can imagine that the gain on the S&P is not nearly as big. So the gain on S&P is not nearly as big as it is if you are holding it in US dollars because of the exchange rate issues. So yeah, basically SPX all-time highs, trucking higher, NASDAQ doing the same things. I just think it's pretty corrective. I think it's breaking the highs and retracing. I think it's slowing down with the momentum. So not my favorite thing right now. You can see I have my levels. So I have the levels set, looking for a pullback to the levels, and then I would look for some buy setups. Okay, that's it for the NASDAQ. I've been going on and on and on about the NASDAQ. It doesn't basically benefit anyone for me repeating myself for the 100th time. Gold. So gold and silver are my 2 favorite things to trade right now. Gold and silver seem like the most interesting assets right now. What is the reason? Well, inflation is going higher. US jobs data is not that great. The latest data has been pretty weak, so the US is definitely struggling. Okay, and any data that is coming out is pretty much going to be bullish for gold and silver. Like this week is a pretty good example, because if we had high inflation, that means people are going to buy gold, because to defend themselves from to defend against high inflation, people tend to go into gold and silver. But then if inflation came in lower, then you get more rate cuts, and rate cuts are bullish for gold as well. So in this sort of an environment, in the current environment, gold and silver benefit from pretty much any sort of a scenario. So that's pretty cool. I just think we are a bit overextended. I think the market had the massive uptrend. It had the massive momentum. And yeah, I'm looking for a pullback. I think we're going to pull back at this point. It does look to be slowing down a little bit. Let's check. What is the retail doing? Can I get a retail reading here? Let's see. So we can get the institution. We can get the retail sentiment history. Let's see. Okay, until it loads. For silver, I pretty much have the same opinion. So I think we are a bit overextended here. Although long term, I'm very, very bullish. And if we do pull back to this level of support, if we do pull back to here, I would definitely be interested in getting in on some high probability buy setups. That is the game plan for the gold market, or sorry, for the metals market. Let's see. So looks like, okay, this is the euro dollar. We need gold. Looks like the retail is kind of bullish. Yeah, the retail is starting to be bullish. Let's see silver. By the way, you want to do the exact opposite of the retail, folks. Okay, kind of slowing down. So yes, they were pretty bullish, but then it sort of started to slow down a little bit. Let's see this. Yeah, starting to slow down. So I don't really have a bias from that. If we go to the institutions, go to the history, and here if you type in gold, by the way, if you do want to check out the Edge Finder, they are running a 45% off sale with my code MARKO. So you can get 45% off if you use my code MARKO. The link is in the description of this video. To get the Edge Finder software, it is basically my go-to software for anything that I'm seeing in the markets. Let's see if we can do this. No, let's do the last 12 months. It's gonna be better. Yeah, a bit of an increase in the last couple of prints for gold in institutional buying. So you want to see that. You want to see institutions buying because you want to do the exact same thing as the institutions, but the exact opposite as the retail. Here as well, so slight increase lately in buying of silver. That's good, that's okay. Yeah, I like this, looks pretty good. And my favorite thing, as I mentioned, my favorite thing right now, let me just see something. Okay. So, that's about it for the metals. I've been also talking about this for quite a long time, I think, for at least the last few weeks. We have just been trucking higher, grinding higher. We do have the euro dollar, which I am in a long trade on this one. I do have a take profit set at this level, so I don't want to spend too much time inside of this trade. For the dollar, I think there is a bit more downside, but not a lot. So I don't think the dollar is going to crash. I don't think the dollar is going to lose massive value like a lot of people are thinking and advocating for the dollar to do. So a lot of people are saying that the dollar is just going to crash. So I do think it can lose a bit of value, but I don't think it's going to go lower than this, let's say, level of support. I would be surprised. So I would be surprised if it does go lower than this level of support right here. We shall see. I just think most of the rate cut story is already priced in. I don't see a major catalyst for this heavily dropping. I don't see a major catalyst for a sell-off on the DXY. You know, because I'm looking at the charts and I saw this downtrend 2025. I get it. I know why people sold the dollar. I know there was a massive catalyst. Trump came into office, slapped on massive tariffs, increased uncertainty, he also mentioned the big beautiful bill, so increased government spending. That all creates uncertainty. That all creates, let's say, motivates investors, hedge fund managers, pension fund managers, the big players, the players that actually move the markets. That all motivate them to sell US dollars and to hedge against the US dollar. So that was the catalyst. I get this sell-off. I just don't see what would be another massive reason for the markets to sell off here. To sell off from, let's say, this level and break 96.4. So if anyone has any ideas, you can definitely put it in the comment section. What you do have to know is the market is just people buying and selling. So if you don't have a catalyst, if you don't have a massive reason to sell, it's not going to go down. My forecast right now is slight push lower and then we stay flat maybe. And that is reflected in my euro dollar long idea. So that is reflected here. Is it holding this trend line? I'm actually out of this trade on my personal IC markets. Unfortunately, I'm still in on my DarwinX and on my prop firm accounts. So yeah, it is what it is, but it is kind of respecting a trend line, kind of. If we can make it a bit bigger from here, let's say. Yeah, sort of respecting it. So that's good. That's okay. I want to get out. I don't think if we touch this level, there is a lot of upside room for the price to go. Europe as an economy is doing well. We can quickly run through that. I haven't taken a look in quite a while. So if we go to the recent data has been kind of 50-50. For stock market, it has been really bearish, unfortunately, for the Europe stock market, for example, for the DAX. And the DAX has sold off on this. So the DAX has sold off quite a bit. But if we take a look at some trends, such as the GDP, I think it's pretty healthy. Yeah, positive, pretty healthy, I would say. For Europe, Europe has always been shit, especially in the last few decades. Like massive outperformance from the United States. Europe has just been in the dumps, so this is good for Europe. It may not be good for the United States, but for Europe, see United States much bigger numbers, but for Europe it's okay. So let's see unemployment. What is the unemployment like? It's pretty high, but it has always been pretty high, and it's coming down. So if we check out let's do the last 3 years. Whoa, yeah. So unemployment definitely coming down, which is good. That's okay. You want to see this. You want to see a downtrend in the unemployment rate. Although it's still pretty high at 6%. Inflation, CPI, see euro. Inflation is right around the target. So for most central banks, the target is supposed to be 2%. Do they respect the target? Lately, they haven't been respecting the target, but they should. Okay, it's kind of the rule to target 2% inflation. So it's okay. Euro is good. Euro is good. I just don't see a lot more reasons for this chart to go higher right now, unless there is another massive catalyst. For example, Trump doing something crazy. So if Trump does something crazy, then you can definitely get a reaction. So that is my first position. Second position is the Euro GBP long, which I did move my stop loss to around this level, right around 0.86350. I did get taken out on some of my accounts. My personal IC markets is still in this trade, which is pretty funny. This has been the second trade where I got taken out on some accounts, but I stayed in on other accounts. So pretty funny how it goes. And for Euro GBP, I am I'm being patient. I kind of want to get out. I do have a take profit set at 0.87370, so I definitely want to get out of this trade. It hasn't had the reaction I was betting on. I wanted to see this explode up on the 11th of August because the pound is doing pretty poorly. So the pound right now is really struggling. If you look at the fundamental data, the pound is the second worst major economy. The first one I would say is Canada. So if you look at the numbers coming out of Canada, it's pretty bad. So Canada is doing pretty badly. Second sort of fiscal sinner, like traders call it fiscal sinners, or traders call them fiscal sinners. The second one would be GBP, the UK. How do I know this? Just to refresh, I am looking at the GDP for the pound. So not great. Unemployment. Now unemployment is pretty bad. Rising. Unemployment, not good. Tough to stop this trend, but Canada looks even worse. I'm going to show you Canada. Look at Canada. Oh. Canada, just crazy unemployment. So this is really bad. I don't know what the hell will Canada do. And then you have inflation, which is still above target and is rising in the UK. So above target and rising. That's pretty problematic. That's a stagflation period. So let me write it down. Stagflation. That's the worst sort of thing you want to see. Okay, recession is the worst thing, but stagflation is pretty bad. Stagflation is when there's bad growth, rising unemployment, and rising inflation. That's stagflation. In most cases, the currency loses value because stagflation lowers the demand for the currency. In this case, the pound. So that was my initial idea. It hasn't worked as well as I thought. I paid quite a lot of spreads. So I can show you my spreads, or I can tell you my spreads on my MetaTrader for my IC markets. How am I now in the red on everything? What the hell? So what is it? Euro GBP. So my swaps long on one lot is minus 8 euros. So if you're holding one lot open, one lot buy, if you're holding it open, you're paying 8 euros every single day. So if you're holding for 30 days, that would be 30 times 8, around 240 euros in fees. If you're holding one lot open, that's pretty big, that's pretty high. I'm not holding one lots on my personal. I think I'm holding close to that on my Darwinex, which is a 100K account. But here on the personal, it's definitely not. It's definitely much lower than one lots. I can still feel the swaps though. So I want to get out. I don't want to be in this trade for much longer. USD CAD is my favorite position right now, I would say. So I really like USD CAD longs. Now for the USD, I told you I'm kind of bearish, but not a lot. I don't think there's a lot more downside. I don't think there's a lot more downside for the US dollar. I do think there's a lot more downside for the Canadian dollar. Okay, I definitely do think that. Let me see what GBP CAD is doing. So if we pair up GBP CAD, yeah, it's gonna be kind of flat. What about CAD Yen? CAD Yen. Okay, CAD Yen starting to become a bit bearish. So maybe CAD Yen could be a good play as well. Going short on the CAD Yen. Yeah, because I'm really bearish on the CAD. For the Yen, I'm kind of bullish if we do get those rate hikes. But yeah, I already have a position in. One more reason why I do like this position is it's a hedge. It's a hedge against my euro-dollar long. So if the euro-dollar trade goes to shits, if it hits the stop loss, USD CAD should go up, right? So USD CAD should go up. That's why I like both of these positions. Both of the positions are also positive reward to risk, at least that's how I'm planning them to be. I have the take profit set, so I have the take profit. Give me just 1 second. I have someone at the door. Okay, I'm back. So, it was the guy that cleans the building, so maybe he will come and ask for water now for cleaning. So I may need to jump off again in a minute or two. We will see if he will ring again. Continuing with our game plan. USD CAD. Good trade idea in my opinion. Stop loss is below this level, so below support. I do have my stop loss. I like this support level. I think it should hold. So Red Rose says data today looked pretty stagflationary, yet stocks are pumping. What do you think? Well, yeah, I mean CPI is rising. So for the USD, the CPI is definitely rising, which it seems stagflationary. You know, you're looking at NFP. NFP is going lower, so there's a downtrend on NFP, and then you're looking at inflation, which is going up. That's textbook stagflation. So yeah, we will see what will happen. The market doesn't care so far. I mean, the summary is Nasdaq is up, S&P is up a lot. Damn, what the hell? Russell up like crazy because Russell is small cap stocks. So the Russell is small cap stocks, and small caps benefit the most from rate cuts because they can take on a lot of debt, and even if they're not profitable, a lot of these companies in the Russell are not profitable. So even if they're not profitable, they can still improve their sort of stock price because they artificially inflate it. They take on a lot of debt. So rate cuts are great for the Russell. Yeah, stocks are up. Damn, stocks are up a lot. Okay, this is not US, but DXY is down. So again, expectations of rate cuts. Pretty weird market reaction. You would think since CPI is rising, you would think that it would not be such a reaction. Brent Donnelly, the guy that I talked about at the beginning, he said that the target inflation rate has now moved pretty much to 3%. So it's not written, but pretty much like people are okay with 3%, investors are okay with 3%, even the Fed. So even the central bank is okay with a 3% inflation target. We are at 2.9. We are rising as well. So basically, yeah, you can see this is target inflation. It used to be 2%, but now it has risen. It has risen to 3%. It's just that no one talks about it. So USD CAD we covered. I'm sure people who don't own assets aren't okay with 3%. Yeah, the problem is most of them are not even following the inflation prints, and most of them don't even have the power to do anything. So yeah, the common people get screwed over as always. The common people get effed over. I can't use the F word because I would get demonetized, but it's the way the world works. Most people don't own assets. Most people don't own stocks. Most people don't own a home. Most people keep their money in cash, and that cash loses value every single year by 3%, in this case, around 2.9%. So yeah, as you mentioned, most people don't like this, but no one asked them. What only thing that matters is what the big players think, the people that own assets, the Fed, and that's it. that's it for my watch list. Technical strategy, if anyone is watching this or will watch the recording for my technical strategy, let me quickly glance through the currencies. GBUSD looks good to buy. I like this impulse on the 1 hour chart. Now this is a completely separate strategy. Why do I have this alert set? I know I have it set, but let's remove it for now. So Aussie dollar pumping like crazy. I like this for buy setups for this technical strategy, which is pure 1 hour chart. Aussie Yen, NJ, yeah, GBUSD and Aussie dollar look the best on the 1 hour chart for buy setups, especially the Aussie dollar. So I want to check out bonds. US 10-year. Hey, Slugmeister, what's up? Hope you're doing well. Looks like the bond prices, or no, sorry, this is the yield. The yield is going lower, which is exactly what the US administration wants to see. What about the 2-year? Let's see, 2-year. Yeah, definitely going lower. What about the 30-year? Going lower as well. So pretty much the bond market is doing what the US administration wants to see. So nice sell-off in the yield, which means the bond prices are going up, which means TLT should be up as well. TLT reflects the price of bonds. So the price of 20 plus year treasury bond. And you can trade this. I have it on my IC markets. I checked. Let me check again. What's the name of it? So TLT. Yeah, TLT.NAS. It is a ETF CFD. Swaps are pretty high if you want to go long, but yeah, it's pretty cool. So I think on prop firms as well, I think you should be able to go long on prop firms with TLT. And TLT usually goes up with gold when there is uncertainty, inflation, cutting of rates, bad NFP. TLT can go up. I mean, gold is much better. If you want to buy and hold something, gold and silver is the way to go. Just look at these charts. So good, so good. Well, TLT, not so good. Definitely not so good. Hey, Marco, do you trade options? No, I don't trade options. I would like to, but I have a problem where my personal capital is not that big. So I have all of my money in IC markets. For options, I would need at least, I would say, 50, 60, maybe even 100,000 euros. I don't have that. And prop firms, they don't offer options. So I think options are great. I think options offer a great edge if you know how to trade them. I just don't have the capital right now to do it. If in the future I do have more capital, I will definitely explore options. I just wish prop firms had options. I don't know why there hasn't been any prop firms that offer trading options. So maybe because options are so volatile and you can lose so much money, but you can also make so much money. So prop firms are probably scared that someone doesn't make too much. Of course, prop firms bet against you. Okay, prop firms bet against you. So when you make money on the funded account, they have to pay you out of their own pocket. That's why they don't want you to make money. If you only hold Bitcoin or gold for the next 10 years, which would you pick? Well, that's a good question. I would pick gold. If I had to pick one, I would pick gold. I just think gold has a bigger track record. So gold has been traded for decades, centuries. Gold has been around forever. Bitcoin is pretty new, and I have more confidence in holding gold. And gold is pretty good. So gold gives you a pretty good return. Pretty nice uptrend. If we go to the monthly chart, see? Pretty healthy. If you bought it in 75, look at this number. So massive, massive appreciation in gold. Okay, Bitcoin is just very new. Bitcoin started in, I believe it's 2013, and I just don't have massive confidence as I do in gold. I was watching Chris Pulver, I believe. Strategy, his win rate is amazing and great option strategy. Yeah, it's great. You can have a super high win rate. You can sell, I think it's selling premium or collecting premium, which basically means if the price is super flat, with options, you can bet that the price will continue to be flat and you can collect premium. So during range bound markets, you can make quite a lot of money. And that is exactly what Chris Pulver, if you don't know who Chris is, he's part of A1 Trading, and he also has his own YouTube channel. So I highly encourage you guys to check out Chris Pulver. And he has like a 90% win rate, or even 95. But when he loses, he does lose a lot. Of course, over time, it makes sense. Even with a couple of losses, that massive win rate does make sense. Again, you need the capital. That's why most retail traders are not trading options, because they don't have the capital. Well, first, the reason is it's super complicated. Second thing is they don't have enough capital. Gold is already what Bitcoin is trying to be, store of value, dollar hedge. Exactly. But with your question, if I had to pick one or the other for the next 10 years, which is a pretty long period, it would be gold, because Bitcoin it hasn't had such a huge track record. Yes, it had an explosion in value, so your possibility to make crazy returns is massive with Bitcoin, but it's just been around for a decade, like 10 years. 12 years, let's say. That's not a lot. What did I want to cover as well? So I just wanted to run through the rest of my watch list. S&P, just crazy, pushing higher. I'm not sure why. As I mentioned, the whole US stock market is being very bullish. I'm not looking to buy anything, so I'm not looking to buy any of these indices. I think a pullback is due to happen. I think a pullback will eventually happen. I think we are looking a bit overextended, so I am being patient. The DAX is in the dumps, especially lately, which may be because... Let's see. It may be because of this. So because the impact on the stock market has been really, really bearish. The news that is coming out for Euro has been pretty bearish for the stock market. And Japan has been doing pretty well in terms of its stock market. So yeah, I agree with you. I'm basically saying Bitcoin is trying to be what gold already is, but there's no guarantee it will ever be. Yeah, of course. So we're on the same page. Do you stream regularly at this time? Yes, I do. I usually stream every Thursday at around 4 p.m. London time. For all of the updates, make sure to follow my Instagram, which is @MarcosTradingJourney. Okay, so that's my Instagram, and I post all of my updates about my streaming schedule on there. But usually it's gonna be Thursday, 4 p.m. London time. If it's NFP, I'm probably gonna stream on NFP, which is usually a Friday. Or is it the Friday most of the time? Yeah, I think most of the time it's a Friday, or all of the time it's a Friday. So Japanese stock market seems good, actually seems enticing. Let me see, Japan. Okay. So you have the currency impact and the stock market impact, kind of bullish. For the currency, it's bearish. Check the trend. GDP for the yen. Let's see. It's okay. So the GDP is pretty positive. I would say Japan is doing all right. I would say Japan is looking pretty healthy. Unemployment rate is maybe even falling a little bit. If I filter this for the last 1 year, let's say. Let's focus on the 1 year. it's consistent. So unemployment is pretty good in Japan. Inflation, JPY. Falling inflation on CPI still above the target. Still above the target. PPI, JPY. PPI is okay, it's falling as well. Yeah, so Japan looks okay. It makes sense that we are crushing higher. It's also following the United States. I personally am not looking for an entry. I don't have the expertise to go long on the Nikkei. I don't have enough fundamental knowledge or fundamental facts to go long. I would much rather, you know what I'm looking at? I'm looking at USD yen. So I'm looking at USD yen to possibly short. Oh no. So I'm looking at this support level. And if we can break it, I think we can get a pretty bearish price action. Dollar, slightly bearish, neutral, but the yen, I'm pretty bullish on. We could get those rate hikes. As I mentioned, look at the implied change in the interest rate for Japan. Here is Japan. So rising means they're probably gonna raise. Interest rates, which should be bullish for the yen. Okay, so Nikkei Platinum. What is Platinum doing? Platinum is being kind of flat in this area. So Platinum is not doing much. I'm not trading it, to be honest. Copper. Yeah, copper is just boring, flat. And it's super volatile, or it used to be super volatile. It is highly impacted by geopolitics. So what is Trump doing? What is Russia doing? What is OPEC doing? I think it's OPEC that they are with oil. I'm gonna have to brush up on that. But anyways, copper. We're talking about copper. So we're gonna talk about oil, but copper is highly impacted by the tariffs. And I think this massive candle had to do with tariffs. Also, this move up had to do with tariffs as well. So Bitcoin, now for crypto. Crypto is, in my opinion, kind of flat here. If you do watch the halving cycle for crypto or for Bitcoin, you're gonna notice we are now in the part of the halving cycle where Bitcoin loses value. So where Bitcoin actually stagnates or loses value. We had, I think, 3 halving cycles happen already. And in all of those 3 halving cycles during this time, we had a loss of value or kind of flat price action. So Bitcoin, I'm not that bullish on. I'm not exactly looking for buy setups. Ethereum, I think it's definitely kind of a topping pattern on Ethereum. We crushed all-time highs. So we crushed all-time highs, then we pulled back a little bit. What you do have is you have a lot of companies in the US buying a bunch of Ethereum and propping up their stock price through Ethereum. So they are thinking, well, look, we're not that profitable. Our company is kind of going down, so we're not that great as a company. Let's buy a bunch of Ethereum and artificially inflate our stock price. So a lot of companies are doing that. They're over leveraging. Lately, I think their stock price actually went down quite a lot. That is why this huge explosion in Ethereum happened. Because of that massive buying, I think the train is over. I think that the bull train for Ethereum is done. I think a pullback is going to happen, or we're going to stagnate. We're going to be flat. Also for crypto, I mean, Bitcoin acts as a technology stock. So basically, if the Nasdaq goes up, Bitcoin should follow. If the Nasdaq goes down, Bitcoin goes down. So if you're getting a pretty bad NFP print in the United States, so if you're getting a downward trend on the NFP print in the US, Bitcoin is not going to benefit much from that. So it's not that good for Bitcoin. Bitcoin goes up when people have extra money. Bitcoin is a very risky, very volatile asset. So when people have extra money to park into Bitcoin to buy risky investments, then Bitcoin goes up. Right now, the environment in the US is falling NFP plus rising inflation. That is not the best environment for buying risky assets. That is more of an environment to buy gold. So money may be flowing, maybe even from crypto to gold. You never know. People say that Bitcoin is digital gold. I still think it kind of acts. I still think it kind of acts as a technology stock. Okay, as a technology stock. So that's my thoughts. Those are my thoughts on crypto. For today's CPI numbers came in higher and worse than expected unemployment claims. Doesn't that mean stagflation environment? It should. In theory, it should. It definitely should. But you're going to notice that the markets don't always do what is logical. So the markets do what they want. And looks like the Fed has a new target, which is no longer 2%. It is 3%. And the Fed doesn't care. Looks like they're going to cut interest rates into that environment. So I know it doesn't make sense logically. You're looking at rising inflation in the United States and they're going to cut interest rates. Doesn't make sense, but the market does what it wants to do. So you get these erratic periods, you get these periods of weird behavior from the US government, from the Fed, from Trump putting pressure on Powell, Trump putting pressure on the Fed. We have to adjust, we have to adapt, and we have to trade. So for now, it's not a stagflation for now. It's just not. There is signs, there is some cracks appearing, saying that possible stagflation is coming. As it currently stands, the markets are not pricing in stagflation. I mean, the stock market is just crushing higher, and that's the best indicator that we have of what is actually happening in the markets. Okay, so the VIX. I'm not going to talk about the VIX too much. The volatility is going lower. US oil. Now, US oil for me is very similar to copper. US oil is very tough to trade, very volatile, very much impacted. So very much impacted by what I want to say, geopolitics. Yeah, so very much impacted by geopolitics. And I'm not sure that I am proficient enough to trade oil. Again, tariffs, Trump, Russia, agreements here, there. You have the Middle East, craziness in the Middle East, drama in the Middle East. It all can change the price of oil in an instant. And then you get this chop up, chop down, Israel and Iran, conflict ceases, so cease of conflict. This explosion in January, this is Trump, I think. Yeah, that's Trump. So I don't think I have a massive trading edge on oil. That's why I currently avoid it. Nvidia and AI trade is carrying stock market hard. Yes, I would agree with you. So let's check out Nvidia. Daily kind of pausing a bit, but look at the massive uptrend. Look at the overall uptrend. So the AI craze, the massive spending into AI is definitely pushing prices up. It is definitely propping stock market prices to the upside. You're absolutely correct. How long can it last? No one knows. So far, it's just continuing. And it's kind of frustrating. You know, it's kind of frustrating to see this, to never get a pullback, to just see an explosion higher, even on bad inflation data, and to just see the Fed, the central bank, is going to cut interest rates with high inflation, but frustration is not going to make you percentage. So we must focus on where can we find an edge, where can we find the market edge in this sort of an environment. For oil, it's very volatile and hard to get a read on. I've given up trading oil. I don't think I've ever placed a trade on oil. I just see the chart. I see what's going on. I see the fundamentals, which are super hard to read. So I don't do anything. For the DXY, I already gave you my forecast. I think we're going to hit 96.4, but I don't think we're going to go much lower. For the yen, right now we're being super flat. Prime Minister Ishiba quit this weekend, so that creates some uncertainty. That also puts a question mark on the rate hikes. So we will see. My forecast is that rate hikes will come. Again, look at what is priced in. So currently we do have rate hikes priced in for the yen, but we're a bit flat. So my forecast is this: grind higher. Hopefully it happens. Hopefully I can get a sell on USD yen. I think that would be pretty high probability. It just looks like there is a crazy buyer for USD yen. It looks like there is a crazy buyer at 146.3. It's just been buying. Every time there's a dip, it gets bought up. And this line is super flat. Super flat line. So there's definitely a massive whale that is buying this level. Why? I don't know why. Swaps will be expensive on UJ. Yep, they will be. Yeah, they'll be on UJ longs. So UJ longs, or no, shorts? Yeah, shorts. Yeah, sorry, shorts. So if you buy UJ, you get paid swaps. But if you sell UJ, you pay crazy swaps. And swaps are pretty high. If you go to the carry trade scanner, you find UJ. Let's see, USD. Yeah, here. See the difference between the US dollar interest rate and the Japanese yen interest rate? Massive divergence. So the swaps will be super high. That's going to be a factor as well if I'm going to be selling UJ. TLT we covered, 10-year bonds we looked at. That's pretty much it. That's pretty much everything I have for you guys today. So just to repeat myself, if you do want to check out the Edge Finder, there is a 45% off discount. So you can use my discount code MARKO if you want to check it out. If you want to get access to my daily forecasts for free, go to Zentum Trading and join our free Discord. So you get daily free market forecasts from me. Okay, and you get some other stuff as well. If you want to become a paid member, get access to our full strategies, our full course, weekly Zoom meetings, and weekly trade recaps, you can do so as well. You can become a paid member. But join for free at first. Later on, you can become a paid member. Okay, that's about it. Let me run through if I missed anything. So euro dollar is continuing to go higher. USD CAD is continuing to screw me over and go down. Just kidding. And that's about it. I think I covered everything. So thank you everyone for the comments. Thank you Slugmeister. See you next week. If you want to join, I will most likely be streaming next week on Thursday at 4 p.m. London time. All of the updates are on my Instagram account. So at Marcos Trading Journey, make sure you give me a follow. And that's it. Good luck in the markets. Now you know the general story. Rate cuts are coming. They're not going to be that big, but they are coming. So thank you and see you in